Ladies and gentlemen, welcome back to the channel. Rezolve AI is down 3% today. But what we're going to talk about in this video is of the utmost importance. We're going to talk about the private placement from yesterday, what price the placement was at, how many shares, but really how that placement confirms everything I've said on this channel. It confirms everything. As simple as that. October 1st, we're going to get a big guidance raise. The stock is going to go parabolic, in my opinion. I'm not a financial advisor. I'm not a financial planner. Let me know your thoughts on this down below in the comment section. I will share my position in this video. Like, if I'm right, I'm going to be right big. If I'm wrong, I'm going to be wrong big time. Okay? Just want to put that out there. We're also going to take a look at the option activity today as well for Rezolve AI and talk about what's happening in the broader markets today. So again, at the time of recording this video, Rezolve is down 3.59%. Nothing matters besides October 1st. Literally nothing matters at all. Okay. Yesterday's placement was massive for the stock, and I want to explain why that is. First, I do want to say, if you have not checked out the link down below in the description of this video to come join the trading community, come get involved in the action in finding these small cap AI stocks, these high quality companies like Rezolve before Wall Street does. That's what we're doing. We want to be early to high quality AI stocks that Wall Street is underlooking. Okay, we do have some biopharmas as well that have done really, really well. Other stocks also. But that's the general idea. Be early to really good companies. You don't make money if you're late to things. You only make money if you're early. This portfolio is up 185.65%. Honestly, I think it's going to get even more extreme after October 1st into the end of this year. This portfolio could be up 300, 400, 500% by the end of the year. Obviously, again, not a recommendation, not financial advice. Don't be a jackass. But if you want to join, come get involved with us. Check out that link down below in the description of today's episode. So let's talk about this private placement. Okay. On September 24th, yesterday, Rezolve AI announced it had entered into securities purchase agreements with institutional investors to sell 37 million ordinary shares in a private placement, raising approximately $200 million. The funds are intended for accelerating investment sales, potential M&A activities or M&A opportunities, and general corporate purposes, with the offering expected to close around September 25th. So this has been in the works for a while now, right? It didn't just come up on September 24th and close the next day later. It's been in the works for a while. Now, the price was $5.40. So how you can look at this is it's valuation support, okay? Because a private placement is an agreement with institutional investors versus if the company were to go out and sell 37 million shares on the open market, there's no valuation support there. Anyone can buy those, right? Retail investors, anyone. But if institutions are going to say, okay, cool, I want to buy 37 million shares at $5.40, I think that's a good price or a great price. That's valuation support, baby. If you bought shares at $2, $3, $4, $5, then you basically have institutions that are willing to buy them for higher than that. That is valuation support at its finest. The most important detail, though, that I do want to make very clear in this video, it goes like this. Institutions do not buy a stock after, say from last earnings, the stock was at $1.07. Institutions do not buy a stock 400% higher than their last earnings if 6 days from now the rug is going to be pulled out on earnings. In simpler terms, these institutions know damn well October 1st is going to be either a really good day or not a bad day. At the bare minimum, not a bad day. Right? Would you go out and buy a stock at $4 or $5.50 in a massive placement if 6 days later the stock was going to crash on earnings? Let's use a little bit of common sense here, okay? This is not rocket science. Again, the stock, even in more recent times, went from $2.50-ish. It's more than doubled. And institutions are comfortable, more than willing, in fact, the placement was oversubscribed to throw money at Rezolve and buy the stock at $5.40. Seems like a no-brainer to me. This confirms everything I've said on this channel about October 1st. We are about to get massive news and massive guidance. So again, I will ask you, would you go out and buy a stock that's up over 100% in a month and a half if they had earnings 6 days later and you had no idea how those earnings were going to come out? I hope the answer is no. Now, let me just tell you, from an institutional perspective, the answer would be a hell no. I'll wait till after the placement unless you tell me what your numbers are going to be, right? Whoever was in this private placement knows damn well exactly what Rezolve is going to say, 6 days from now when they report earnings. I can guarantee that. Not a lot of things are guaranteed in the markets, but I can guarantee that. Somebody didn't put up $200 million for a Hail Mary in 6 days. Promise you that. Okay. Now, does that mean the stock's going to go up? Not necessarily. Doesn't mean the stock's going to go down. Not necessarily. For legal reasons, I'm not a financial advisor. I am not a financial planner. But do the math in your head. The guidance is $100 million as of now. The company says they're going to exceed that. The question is, where does Wall Street view guidance coming in? It's over 100 million for this year. Is it 120 million? Is it 150 million? I think 150 million, if we get that number, is still a really good number, and I think the stock trades higher on that. But anything above 150 million, if the company says they're targeting 200 million or 300 million, that is massive. But where the big gains come in are, again, if the company gives guidance for 2026. If the company gives guidance for 2026, I'm expecting around $1 billion in guidance. On the low side, 500 million. On the high side, 2 billion, right? Somewhere in that huge ballpark is where we could see guidance for the end of 2026. And that is when the stock goes fucking parabolic, right? That is the home run. October 1st, if we don't get 2026 guidance, is just, dude ran to second base, if you will, right? It's one step closer to the really big catalyst. But this private placement confirms everything about October 1st for me. Now, in option activity today for Rezolve, we have one trade being flagged here from hedge funds and institutions this morning. It is a January 14th, 2027 $12 call. They paid $292 for this trade. So that is a break even at almost $15 per share by January 2027. So the trade size was about $156,000. So that is a very bullish trade also. Yesterday, we had one trade totaling $61.36 thousand, positive order value of 100%. And then over the past week, you've had 3 trades totaling $4.68 million with a positive order value of 100%. Now, short interest of free float at 9.82%. It's been pretty consistent. You have 79.3 million shares sold short. Shares out on loan, 34.29 million. And look at this. Today, you have 2.24 million shares that are being covered on. Hedge funds and institutions, I expect are going to continue to cover into October 1st. They do not want to be short the stock October 1st because, again, if I can sit here and tell you this private placement basically tells you everything you need to know for earnings on October 1st, like other institutions know that as well, right? Other institutions know that it's going to be a good earnings. Now, again, as I said previously, like if I'm right, I'm going to be right big. If I'm wrong, I'm going to be wrong big. Okay. In this portfolio, I have 11,000 shares still, haven't sold anything. Current market value, $71,611, up almost $41,000 or up 133%. Average cost basis, $2.80. In this portfolio, I have almost $85,000 in the stock. Currently up $48,000 or 131%. Average cost basis about $2.82. 13,000 shares here, and I still own my 15 Rezolve 250 calls for February 20th, 2026. Current market value there about $6,150, up about 300%. Or up about $4,600. So in total, I have 27,800 shares worth of exposure. I have 1,000 shares in Webull, 1,300 shares in Thinkorswim. Again, still haven't sold those shares either. Times by where the stock is currently at, about $6.50. I currently have exposure in the company of about $181,000. So if I'm right, I'm going to be right big. Again, if I'm wrong, I'm going to be wrong big time. But honestly, again, I don't plan on selling any shares until the stock is at minimum like 20 bucks. Like that is like the low end of what I could see as fair value today for the company after October 1st. Like we got a winner on our hands. I don't plan on selling. Now let's get into your broader market and what is happening in broader market news today. You can see today the Russell 2000 is the underperforming index by quite a large margin. Russell 2000 is down 0.91%, NASDAQ down 0.4%, S&P is down 0.4%, and the Dow is down 0.17%. The VIX is up 2.22% today, which is not really screaming fear to me. So that's good. 10-year treasury yields are up over 3 basis points. Oil is down 0.42%. Gold down a little bit. And cryptos, well, down anywhere from 2 to 8% today. Partially the reason for this is really good economic data today and GDP. So durable goods orders month over month were expected at negative 0.5%. We actually came in at 2.9%. Okay. GDP growth rate quarter over quarter, final numbers for Q3 were expected at 3.3%. They came in at 3.8%. So across the board, much better than expected economic data. Guys, do not be fooled by this. This is good. I don't give a rat's ass how the markets respond to this, initially at least. Think about the last year. We have not gotten a rate cut in the last year. The trading community portfolio is up 190% in the last year. Stocks have done just fine. By the way, if you want to join that, check that link out down below in the description of this video. Not financial advice. Do not be a jackass, of course. You get that. What's more important is not rate cuts. It is that the economy does okay. Because if you get rate cuts and the economy goes to shit, stocks are going to go to shit regardless. It's not going to matter how many rate cuts you get. Okay. This is great news at a time in which there's a lot of people that are fearful of where the economy is headed. So this is great news. We also have durable goods orders excluding transportation month over month. Another way to look at durable goods orders, up 0.4%. The expectation was 0%. Last month was revised from 1.1% down to 1%. So very strong numbers. The goods trades balance came in at negative $85.5 billion. So a smaller deficit. than expected. And the initial jobless claims came in at 218,000. The estimate, 235,000. So we had really good economic data today, really good labor data today with initial jobless claims. Even real estate data beat expectations. Existing home sales were expected at 4 million, 3.96 million. You came in at 4 million. Kansas Fed Composite Index came in at 4. The expectation was -2. Kansas Fed Manufacturing Index came in at 4. The expectation was -5. Across the board today, guys, much better than expected economic data. That is way more bullish than the number of rate cuts we're going to get this year. Again, if tomorrow we were to go into a recession and the Fed were to cut rates to 0, stocks would still come crashing down. Okay? Just remember that. It doesn't matter what the Fed is doing. It matters how stocks are doing, because like 80% of earnings are directly correlated to the economy. So that's the biggest correlation to earnings, is economic activity, not the Fed and how much they cut rates. Okay. Now tomorrow we're going to have a really big day as well with core PCE. You're expecting 0.2%. Last month was 0.3%. So obviously the lower the better. This is the Fed's preferred measure of inflation. PPI and PPI works into this one a lot. Personal income month over month expected at 0.3%. That's a pretty good number. You don't want that too high or you get inflation concerns. Personal spending month over month is expected at 0.5%. This is another very important metric to show how the economy is doing. So today was a big win, was a big positive. But you kind of have to look through how the markets are reacting because, again, weird September seasonals, all of that plays a role. And again, markets have been looking forward to rate cuts for a while. The latest estimate we got today for, looks like we haven't gotten a new GDP Now update. It says the latest update was September 17th. We were supposed to get one today. We'll get one tomorrow for sure, but it's coming in at 3.3%. Judging on off of the data that we got today, we are definitely going to see an upwards revision to GDP tomorrow. So be ready for that. Now, the odds of Fed rate cuts did fall a little bit. You're still pricing in an 86.4% chance of a rate cut October 29th. So that is still by far the expectation, but it wasn't 97.4% today. So it fell like 9% based on the economic data that we got today. Okay. So that's really why some stocks are reacting negatively, why 10-year treasury yields are going up a little bit, why the Russell is selling off. But again, I will highlight the fact that, the VIX is only up 2.6% today. People are not super fearful of this. They're not super panicky on this because, again, the economic data came in strong. If we had got weak economic data, the VIX would be up more than 2.66% right now, even if stocks were wildly in the green, let's say. This is, again, a positive development today. Russian Foreign Minister Lavrov has said that NATO has declared war on Russia through Ukraine. Goldman Sachs President John Waldron says consumer spending remains healthy with some stress in lower income bracket. Trade is a headwind, U.S. economy to undergrow potential in 2025, calls fiscal path unsustainable, urges spending controls, sees no immediate concerns on fundamentals, constructive on PE-backed deals. Trump says we are going to take tariff money and give it to U.S. farmers. Trump says we are going to distribute farmer aid until tariffs kick in to their benefit. JP Morgan is sticking to their rate cut outlook despite Moran's push. JP Morgan's chief U.S. economist Michael Feroli dismissed Fed Governor Stephen Moran's call to cut cut rates to 2.5% or lower. The bank maintains its forecast for gradual 25 basis point cuts until rates reach 3.25 to 3.5% early next year. A potential Supreme Court case involving Governor Lisa Cook is seen as a wild card, with a ruling against her possibly threatening other governors' positions. JP Morgan warns that a politicized Fed could be more susceptible to Trump administration pressure on policy. Goolsbee says the Chicago Fed's new labor market measures are not a vote of no confidence in the BLS. He says, I love the BLS data. Fed Goolsbee says if rates were excessively restrictive, I would expect to see a drag on business investment, which has been surprisingly strong. Defense Secretary Pete Hegseth has ordered virtually all of the U.S. military's top commanders worldwide to gather on short notice and without a stated reason at the Marine Corps base in Virginia next week, per the Washington Post. Fed Goolsbee says, I am relatively optimistic that tariffs won't drive up inflation broadly and rates can come down. Goolsbee says, I am comfortable with gradual rate cutting if we continue to make sure inflation is headed to 2%. And Goolsbee says labor market indicators show modest cooling. Trump says, I think it's time for Russia to stop. I really do. Trump on the war in Ukraine says the NATO relationship with the US is the strongest it's ever been. Trump said that Turkey's president could help pressure Russia to end the war, and Trump says in return, the US could lift sanctions on Turkey almost immediately. Citadel's Ken Griffin says he thinks the Fed will cut one more time this year and two on the outside. Citadel CEO Ken Griffin says inflationary impact from tariffs is still coming. Trump and Erdogan hold bilateral trade meeting in the Oval Office today. That is Turkey's president. Ken Griffin says the American economy is doing well. The Dutch Prime Minister says Russia takes the risk of jets being shot down if they cross into their airspace. Fed Bowman says the data the Fed uses has not been as accurate as we would like. Fed Bowman says tariffs will have a one-time price impact. He says we have some space to bring down policy closer to neutral so we can support the labor market. Fed Bowman says it is appropriate to shift to jobs instead of fighting inflation. She says we have a more fragile labor market. The Trump administration aims for final South Korea deal with terms that are similar to the Japan agreement. Now, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. And check out the link down below in the description of this video if you want to come join the trading community and get involved with the action with us over there. Have a great rest of your day, and I will see you in the next one.